and puffy, and I would go to sleep and I couldn't breathe, and it was just pure hell. Fortunately, I either grew out of it or or maybe living in Illinois makes it better. I have no idea. Um, there is actually a stock I was about to buy, and I'm going to share that with you guys. 1 second here. So give me 2 secs to set us up, and I'm literally going to buy it now, and then I'll tell you what I'm buying, and then if you want to take a look, you can. Um, where is that freaking stock? I was going through so much information today. There's so much happening right now with my team and everything. Plus, it's my anniversary with my wife, so my brain's kind of scrambled because I'm trying to figure out how to be a good husband and make a nice plan for her or something. I don't know exactly what to do. Romance is kind of hard work for me, but I love her, so I want to do my best. All right, so okay. Okay, so here is what's happening right now with this market. It's doing extremely well. It is it is really strong right now. And and so there is a stock that I wanted to take a look at, a company called Structure Therapeutics. And apparently they are considered by JP Morgan to be sort of overlooked in this whole diet drug industry. I think they call them GLP-1 drugs. And apparently stuff like Ozempic and all that's kind of really taken off. And it says, according to JP Morgan, it could one day boast a competitive product and go up against Eli Lilly and other companies and maybe go up as much as 80%. They initiated research coverage on the clinical stage drug developer with an overweight rating of $65 price target, which is a 82% upside. Now, this stock, um, Structured Therapeutics, it looks like the ticker symbol is GPCR. Let me see if I can find it here. I'm hoping it's on Robinhood. Let me see here. GPCR. Yeah, Structured Therapeutics is currently trading for $36. It's gone up. Well, actually, it's gone down just a little bit. It's really, the analysts really love it. So I'm actually literally just to show you all that buying stock should be something that you just do regularly, just, like you're buying a pair of shoes or you're buying fast food. I'm just literally going to hop in here and buy it real quick. And the thing about it is that, in my view, if you want to be a good investor, you should be investing so consistently that you don't even remember everything you bought. Like, sometimes some of you will come up and you'll say, I bought 10 shares of Tesla and it went down so far I've made 20 bucks or I made 80 bucks. And the thing is, I want you to be able to say that you've invested so much that you don't even remember everything that you own, because that's kind of how you want to approach investing. You don't want to approach it as, sort of putting all your hopes and dreams in one stock. In my view, you want to put your money in so many places that you can't remember all the things you've invested in. It should surprise you. Like when Nvidia took off, I literally had to go into my portfolio to see if I owned Nvidia, and I did, and which was great. And so, and my wife and I made a decent ROI. I think we bought $5,000 worth, and it turned into almost $100,000. So sometimes you have those hits. Sometimes the stock will just do something wonderful and make your day. Most of the time, that doesn't happen. Most stocks do not move like Nvidia did. So don't assume that every stock is going to give you the same response, but it does happen. It does happen periodically, and pharmaceutical companies are notoriously jumpy. They can go from 0 to 60 on you real quick. They can plummet on you real quick, right? So, it's a volatile situation. But I do have a nice little portfolio of pharmaceutical companies that I like. And pharmaceutical companies are also good if you are into things like selling stock options and stuff like that, which is what we do in the Prime program. If you're interested, you can take a look at drboyceprime.com. That's where we do the stock option stuff. And if you're a Prime member, at some point this week, I am going to reach out to you guys because I have some stuff I want to share with you. Actually, this week, the magic trick I want to show you is how to loan yourself $10,000 out of your portfolio. Literally, how to take a pile of stocks you own and pull out $10,000 if you need money for whatever. If you want to put a down payment on a car, or you have to make a repair, or you want to add an extension onto your house, I can show you how, if you have a capital base, you can literally go and just like going to a bank and borrow $10,000 from yourself. And if your portfolio is big enough, like some of you that are in the mastermind, I met the first mastermind students this week. Some of you have, over 100,000, 200,000, a million. And a young lady came to me when I was at the Get Money Fest and said she literally just got $1 million in a lawsuit. And so some of you have a lot of money. And if you have a capital base like that, you never have to work for anybody. Even $100,000 capital base, if you're capital efficient, can keep you from the corporate plantation. It can keep you from having to ever work for anybody. But if you have $1 million, or $500,000, or something like that, and you know what to do with that, it's about knowing how to just kind of get what you need. It's like knowing how to get. It's like if I have a farm and I have a bunch of stuff growing on my farm, and I need syrup. If I know enough about trees and tree sap and whatever, I can figure out, and berries or whatever, I can figure out how to go get some syrup, right? And so what I mean by that is when you have a stock portfolio, the beginning stages of investing, I think, comes down to sort of having these stocks and just owning them, which is great. That's a great start. And buy and hold. That's the most simple way to invest. That's literally the most critical thing you can do. If you're not buying something and holding something, then you're not really sort of moving along with the economy. I think that's really important to do. But then after you learn how to buy and hold, then you can get into things like stock options and stuff like that, which gives you a lot more range and flexibility to allow you to achieve multiple goals at once. So, for example, sometimes I'll run into a situation where I'll say, gosh, I really want a lot of stock, or sorry, I really want a lot of cash. I need cash for something, and I don't want to sell my stock. Maybe I don't want to go get a bank loan. I don't want to use my credit cards. But I want to get this cash. How do I get that? Well, there's ways to do that. So anyway, so for the Prime members, I'll send you guys some stuff. Those that are interested, you can go to drboyceprime.com, or also if you text the word money to 87948, text money to 87948. I'll send you an example of a training I have called How to Make Money Without Working, and that'll introduce you to this whole universe that'll probably blow your mind. So feel free to text the word money to 87948. And that stock that I was mentioning earlier, the ticker symbol. See, I lost it already. See that? Remember, I was telling you, like literally, you just buy stuff and you just buy it and throw it in the corner and just say, okay, I own this. It's Structure Therapeutics, and the ticker symbol. Um, see, y'all got to help me. I literally saw the stock and was like, oh wow, I like what I'm saying. GPCR. So if somebody comes in and says, well, what was his stock pick? Just tell them it's GPCR. If somebody can help me with that. That way I won't be so scatterbrained. All right. So I'm going to answer a few of your questions here in the Q&A section. You can never go wrong with a spa day for your wife, says Rarick. Thank you for that suggestion, Rarick. I think I am going to take it. And actually, now that I think about it, my wife just ran a half marathon and her legs are really, really sore. I got the wonderful opportunity to rub her down with some CBD oil, but unfortunately, my massage ability is somewhat limited because I'm not a masseuse, but I think a real masseuse might do the trick. So, Rarick, you are the man. I think I'm going to take my wife to get a massage today. Thank you very much for that suggestion. King May, when I go into my stock account, my stocks have made money, but how do I find out which stocks are responsible for the increase? What are the steps for selling the stock? Okay, so a couple things in your app, depending on the app that you're using, there should be some button you can hit that will order your stocks based on different variables. Like, so for example, in E-Trade, they'll order the stocks based on the daily percentage increase. That you can order the stocks based on how much money the stocks made that day. You can look at the overall percentage increase, how much money the stock made over time. A lot of different variables. That might be your pathway to getting that information. I don't know which particular platform you use, but a lot of them are similar. In our stock market class, we use let me see. We use E-Trade. We started to dig into Charles Schwab. We use Robinhood a lot for options, for selling options. I like the margin program for Robinhood. From consulting with students on Charles Schwab, I noticed that it seems like they have a different margin plan from Robinhood. They give you less margin, at least for this student, they gave him less margin than some of my other students who use Robinhood. They also charged a higher interest rate, which I thought was really interesting. So what he did was I told him, I said, we were doing kind of a one-on-one, and I said, go talk to Charles Schwab and tell them what Robinhood is charging, and see if they'll lower your interest rate. And they did. I was very surprised. I didn't know a lot of brokers just did that. And then I was like, if you want more margin, maybe you could ask them for more margin. But then your ability to access margin and the amount that you get a lot of times will depend on how much capital you have, how much investing experience you have, things like that. So I would encourage you, be really, really careful. Just know when we talk about investing, this is not investing advice. This is just me sort of telling you what I see and what I'm doing and what options might be out there. One thing I thought about today that's really interesting is I know a guy who started who started doing some of the stuff we do in the options class, where he started to sell stock options, and he bought some shares in some of the companies that I mentioned that I liked. And again, I said this isn't investing advice, but this is what I own. And he was selling the options. He was making all this extra income. He was really excited about it, which a lot of us are. And it was back in 2022. And what I remember about that was he got really squeamish because those stocks started to really drop. And while there are ways to protect your stock against those drops, I don't know how much he had in place, but I know that losing money or seeing the paper losses really rattled him. So he sold everything and just got out. He just got out because he just said, I can't stand losing his money. Well, the reason I feel bad for him is because he walked away after right in the middle of a major loss without considering that the market oscillates. It goes up and down. It goes up and down, up and down, up and down. And so 2023 was a great year. 2024 has been a really strong year. The market's at record highs now. Bitcoin just hit a record high. There are so many different pathways to money right now. It's ridiculous. And I feel bad that he walked away when times got hard. And it's kind of it really goes back to that New Edition song, Can You Stand the Rain? If you want to be an investor, I encourage you to not allow yourself to be talked out of being in the game. You have to stay in the game to be able to enjoy the good times and the bad times. You have to stay in the game to be able to see the gold at the end of the rainbow. If you walk away because it gets a little weird or you have a paper loss, then what's happened to you psychologically is you've been hit by something in academic research that we refer to as the wealth effect. The wealth effect is basically where you just feel poorer or you feel richer, and you really have no reason to feel richer or to feel poorer. You just do. Well, what drives a lot of the wealth effect? Paper losses and paper gains. Like, tell me, give me a yes or no. Give me a yes or no if you can identify with this. I'll put a yes in the chat if you, because I want to make sure you're with me. How many of you open up your app and you see lots of green on a good day and you see everything going up and you just feel like a little bit high? You feel a little dizzy, excited, you're smiling, you feel almost like you just had sex with the sexiest person on the planet, and your life is good and you're going to heaven and Jesus loves you, and the grass is greener and the birds are chirping and life is just great. Give me a yes or no if you know that feeling. I want you to imagine that feeling right now, how you felt probably this week, especially those of you that are members of Prime. You saw some of these. I mean, some of these stocks that we kind of dabble with in Prime are killing it. They were absolutely just kaboom, kaboom, kaboom. Right? Just, I mean, it was an amazing week. Right? Okay. Now I want you to imagine and tell me yes if you can identify with this. Maybe feeling like crap on the days where everything's red. You open up the app and everything, this drop, this drop, this drop, this drop, this drop, and you're like, oh my God, this is terrible. I'm so poor right now. Oh my God, I lost, $500. I lost $1,000. I lost $3,000. Let me know if you know that feeling too, right? I want you to imagine that feeling. Well, what that really is basically when you're building wealth, when you're investing. I'm gonna tell you the honest to God truth. My wife is a therapist, and we talked about that a little bit recently this morning. When you're investing, you're kind of taking a drug. You really are. So you think about Coke being the upper, and heroin, that's they call it in the street, heroin being the downer. I hate drugs. I don't mess with drugs, but this is a good analogy. Well, when you're making money, you've been dabbling in the pink cocaine that Diddy used when he beat Cassie up that day, right? I'm kidding. I don't know if he did or not. I'm joking. But seriously though, you're dabbling in the upper. You're really literally, this is not figurative, that you're literally getting a high from seeing your paper wealth go up. And then when you're having the bad day, you're kind of getting a downer. It's that fentanyl or that, heroin, right? That is pulling you down. It's making you like, oh my God, I'm so depressed, I'm so scared. And then financial anxiety can kick in and all these other things can kick in. But I'm gonna tell you the honest to God truth. And this is a perspective. This is not fact. This is a point of view. It can't be fact because it's a perspective. In one point of view, nothing changed, actually. Nothing changed. And let me explain why. I own a few hundred shares of a company called Coinbase. And Coinbase is um it's a stock that behaves like a crackhead. It has it's like, or bipolar. It's a bipolar stock. Some days Coinbase will make you the richest man in the world. Some days Coinbase will make you feel like you want to go jump off a building. So with my shares of Coinbase, Let me see. My current position in Coinbase is about $105,000 in that I own in Coinbase. This is what I really own. That 105 in the number of shares, it's 470 shares. And well, it's actually now it's worth 106. I literally just in the amount of time I've been talking to you, I've made $1,000 in Coinbase in the time that it took me to complete that sentence. And I hear you, Joy. I'm not making light of domestic violence at all. I had a friend, Robin Simpson, who was actually one of the students in the school who was just killed by her husband in Houston. And so I agree with you 100%. Domestic violence is not funny at all. And if I gave you that impression, no, that's not funny at all. So anyway, let me continue. So and now it's okay, it's down it looks like it's dropping below 105 again. So what happens is that here's the thing, the price is going up and down, up and down, up and down. And what's moving the price? Well, market conditions, the economy, the trading environment, like just all these different variables are moving the market price up and down, up and down, up and down. But nothing's really changed if you really look at it from a certain point of view. Give me a yes or no. Did the number when I went made that $1,000 during that sentence, like literally in that 60 seconds that I made earlier, do I own more shares than I did before I started that sentence? When I made that $1,000, did the company change? Like, did Coinbase go into a different industry? Did they get a new CEO? Like, did something material change about my investment? Nothing, absolutely nothing changed. Nothing changed. It was the exact same company, exact same ownership, exact same everything. So these numbers that are changing, it's easy to argue that paper losses and paper gains, to some extent, not completely, but to some extent, are kind of a figment of your imagination, or at the very least, they are things that matter when they matter, but they don't matter when they don't. They matter when they matter, but they don't matter when they don't. If someone tells me that it's raining in China, I am not going to get wet. I don't care that it's raining in China. Well, unless I'm in China. So I was in China in 2019, and if you told me that it's raining in Beijing, then that would have mattered because I was out running in Beijing with my wife. It's a stinky city, by the way. Shanghai was better. Beijing, but still though. So it mattered when it mattered, but it didn't matter when it didn't. So paper losses and paper gains only matter when they matter. They don't matter when they don't. So the reason that the paper gain and the paper loss, when I told you all I made $1,000 during that one sentence because this something happened in the price change, basically it's like it only matters if I'm trying to sell my stock. I'm not selling my Coinbase stock, and I don't plan to sell it anytime soon. My Coinbase stock, my little stake in my Coinbase stock, I tend to sell options on it, and every week I make, I don't know, I'm guessing like $2,000 a week or something, which is literally that's $100,000 a year from one investment, by the way. So I make my 1,500, 2,000 a week selling my options, and it's like just like owning a donut shop, or I don't know, a shoe store or something, right? And I like it. It's a nice little business. Do you understand? But my ownership hasn't changed. When you have a paper loss or a paper gain, nothing is really changing. So my reaction to this, the euphoria I might experience from seeing the price go up and down to some extent, is a mostly psychological phenomenon, just like somebody telling me that it's raining in China. You're right. I could get sad about it. I could say, gosh, it's been raining so hard and those poor people, they're getting wet. And I just feel it. But it really doesn't affect me in a material way. But if I'm in China, then it does matter. So if you tell me that my stock is worth less, it usually doesn't. I try my best to look away. I say, look, does my asset still do what it does? Does it do what it do? So is it doing what I need it to do? If the answer is yes, I do not care. Because no matter what the price of Coinbase is, every single week I can sell my options, make my money, and I am good with that. And just as an FYI, in the amount of time I've been explaining that to you, the stock went down again to 105,000 or something, right? So I literally lost a few $100s in the amount of time I was talking to you. But did I really lose anything? No, I own the same company, same ownership shares, same everything. Do you understand what I'm saying? This is important to understand in investing, because Warren Buffett actually makes this point to some extent, where he talks about the difference between investing in a speculative asset versus investing in a productive asset. He says that some investments, like he says, if I buy a share of Coca-Cola, I own a piece of Coca-Cola's revenue. And that revenue, that value of that share is connected to how many bottles of Coke that they're selling all throughout the world. It's connected to the value of their intellectual property. It's connected to the value of the factories and machinery that they own and all the other things that are connected to the company. That value remains and that value is true and it exists even if there is no market for Coca-Cola stock. Even if Coca-Cola was no longer publicly traded, it would still it would still have value because I'm owning a piece of a productive asset. However, and this is why Warren Buffett had an issue with things like Bitcoin, is that Bitcoin is not a productive asset. Bitcoin is not a corporation that's generating revenue that releases financial statements and net income and free cash flow, which lends itself to traditional valuation models that help us know what a stock is worth. Bitcoin can't do that. Bitcoin doesn't have an earnings report and everything else like Coca-Cola does to tell you how many bottles of Coke they sold. The only reason you buy Bitcoin, and I'm not saying you shouldn't buy it, I'm just saying the only reason you buy Bitcoin, tell me if you agree with this. The only reason you buy Bitcoin is because you're hoping that the price goes up and somebody will eventually buy it from you for more than what you paid. Am I right or am I right? Tell me what do you think? Right, that's what you're buying it at 71,000 maybe because which I'm gonna do. I'm gonna buy it. And you're buying it because you're hoping that the price will go up. And if the price goes up, then I bought it at 70, I sold it at 120. Look at how much money I made. Good for you. Right. But that makes it into a speculative asset, which lends itself to a lot more volatility and booms and busts and just this possibility what they call the bigger fool theory. They call that the bigger fool theory. The bigger fool theory says that I'm gonna be the fool who buys it at 70 because I believe there's a bigger fool who will buy it at 90. Right. And again, I don't want it to sound like I'm against Bitcoin though. Warren Buffett is very much against Bitcoin. His buddy Charlie Munger talked crazy about it. He hated cryptocurrency. He thought it was a bunch of garbage. People like Jamie Dimon and JP Morgan Chase, they call it a scam, but it's weird because I think Jamie Dimon and JP Morgan, I think they own Bitcoin or something. But I don't know what that's all about. But whether you believe it's real or not, one thing about investing in wealth that they don't process is that the even that term reality is very subjective. If everyone believes something's real, I believe that it becomes real. Like even if you take something that's not real, and if everybody's reacting to something that's fake, well, that fake thing becomes very real because there are very real consequences and real implications of what people feel about that thing, right? So, I don't know, to use a funny example, not funny, this is not funny, but let's say that video of Diddy was a fake video. Let's say it was all made up. It was AI or something. It was a deep fake, and none of this stuff ever happened, and it wasn't real. It doesn't matter because the perception is reality. People have a perception of Diddy, so that has real consequences. He lost 18 brand deals. People don't really want to mess with him like that. I think the mayor of New York City, I think he did, or he's thinking about taking back his key to the city and things like that. Why? Well, because they all saw this video. But what if it wasn't real? What if it was fake? It doesn't matter at this point, right? Or it should matter, but it doesn't. And I do think it's real. And I don't think domestic violence is funny, Jan. So don't think I'm saying that at all. But the long story short is that with stock market investing, that's what makes it hard for the so-called experts like me to for us to come in with our calculations and valuation models and value stock because what happens is that we don't always know the math guys don't know what to do when you see AMC and GameStop tripling in price in one day. We don't. But there's something there to study. There's something there to invest in. There's something there to make money from for sure, right? Because what you're seeing this tidal wave of people that are all buying this stock and the price is going up. And you know that if you can position yourself properly and time it properly, there is money to be made. So really, when I invest in an AMC or GameStop or even Donald Trump's raggedy company that's worth almost nothing, I'm not investing in a productive asset. I'm not investing in something that really makes sense from a traditional standpoint. I'm really investing in people's commitment to their own irrational thinking. Right? That's what I'm investing in this idea that maybe all the Trump supporters will love Donald Trump enough that they will prop up this crappy little stock that he owns, and that the price will go up because of that. So it's a different kind of speculation. And if you want to know about Trump's company, the company is I think it's called Trump Media. There we go. Trump Media and Technology Group. Let's see. The price is $43 per share. The stock's worth about $1. It's gone up 147% this year. which is crazy. 230% in the last year. So yeah, so in Donald Trump, so let's see, the total market cap of that company is 5.98 billion dollars. It actually dropped by $100 million. The market cap literally dropped by $100 million just now. And let me see. Yeah, the company earns almost no. I mean, it's absolutely terrible. What do the analysts say about this company? Let me see. It's like laughable because the company is just really bad. They're losing money. They're losing lots of money, and I don't think the company is a good investment. It's called True Social, I guess. True Social sees wider loss in the first quarter. Yeah, I don't think it's ever going to be much of anything. So, but again, though, I wouldn't call you crazy to invest in it because what you're just investing in is you're investing in this idea that maybe the price is going to come back up and people are going to want to own a piece of this company. So it's kind of a sticky thing. Okay, so anyway, let me jump back in. Let's see here. How do you decide when to roll up, considering rolling up Clean Spark? Okay, so that's an options question. So if you do log in at drboyceprime.com, leave that question in Dr. Boyce Prime, and then I'll answer that. I'm going to do a Q&A today and send you all the video where I answer all your questions. So that way we can not confuse those who haven't been introduced to options. I want to focus more on stocks in this conversation because options are a little bit over some of our heads. So I don't want to scare anybody. All right, so if you have a question, put it in the Q&A section, and I will answer it. And let me just let you all know a couple things that are happening right now that you should pay attention to. Nvidia has a big earnings announcement today. Sorry, Wednesday. That is going to determine whether or not this AI thing is actually working. The stock's gone up a little bit. There are people that are concerned that Nvidia's big rise in price is not going to be sustained. Nvidia has, I assume you know, has just, I mean, that stock has gone crazy in the last year or so because of this whole AI craze, because they're kind of in the driver's seat of this massive industry. That's good for them. But what's happened now is that the expectations are very high. So what could happen is that this stock could very easily crash after after the earnings announcement. And now what does a crash mean? A crash does not mean Nvidia is going to hell. It does not mean the company's going bankrupt. It does not mean that they're not making money hand over fist. What it means is that the amount of money they thought they were going to make hasn't been matched by the amount of money they did make. So the market will say, well, we thought you were going to make $8 billion, but you actually only made $7.7 billion, which means we've got to adjust your stock price. And when you roll that into the valuation model, it leads to a big, big drop in the price. This is the pressure of public markets. That's why a lot of companies don't want to go public, is because they feel like there's this pressure to be as capitalist as you can possibly be and put money at the forefront of everything. And sometimes there are investments that you want to make that are bigger than just how much money you can make next quarter, or maybe they're long-term investments. Like Mark Zuckerberg took a lot of heat because he's a big believer in the metaverse. Well, why shouldn't he be? First of all, I love the metaverse. I play golf in the metaverse. I'm telling you, it's so much fun. Like you got to try it. It's with the MetaQuest, it's so real, but there's frictions, right? People don't want to go through and put the clunky headset on and figure it out and all that. But I'm telling you, like if you take that time to just try it, you are going to absolutely love it. So I go in there and I meet my buddy and we play golf, and it feels better than actually going to the golf course. I don't, because I don't have to spend all the money and all the time to do it. You can hear the birds chirping and the water hitting against the rocks at Pebble Beach and just all kinds of cool stuff. I love it. I absolutely love it. But not everybody does. The metaverse is not mainstream. So Zuckerberg has been pouring billions of dollars into the metaverse on what is seen as a gamble, because he's hoping that at some point there'll be a critical mass of entrance into the metaverse that will help him turn a profit. So far, it's been a massive, massive loss. I think it's called Reality Labs. That's but I think what's going to happen is the thing with Facebook that's interesting is that you've got the metaverse stuff, and then you got AI. And then eventually, the next big player on the horizon, in my opinion, is going to be something linked to quantum computing. Once quantum computing becomes a thing, like in the mainstream consciousness, it's going to change everything. It could change the world almost as much as AI does. They literally say that the first country that can master quantum computing will control the world. That's how crazy quantum computing is in terms of what it does. Like it makes our other computers look just like Stone Age, objects. So I think at some point that, when you're sort of mixing what's going on with AI, and then eventually metaverse frictions start to reduce, where instead of maybe putting on this big, I wish I could show y'all my MetaQuest headset. It's like this big old thing, and it's kind of it does look a little bit nerdy. But eventually, I think now, in fact, they have these little sunglasses, these cool Ray-Ban sunglasses you can put on that'll let you do things, and that's a little bit better, right? So they look almost like the glasses I have, except actually cooler, and you can still do a lot of metaverse stuff on those glasses. I think eventually, when that happens, you're gonna start seeing a lot of people in the metaverse, and I believe that if you try it, I think you're gonna like it. So just give it a thought. So anyway, what else? Okay, where can you buy stock? So let me just say this. Some of you were asking, how do you get started? What do you do? Okay, so let me give you something that can help you get started. If you go to b1investing.com. So somebody please type that in, the number one, b1investing.com. That will introduce you to an ebook I have called the $5 a day investing plan. So that's b1investing.com. That is something that we have in the Black Business School that's very effective to kind of get you started so that you don't overthink the process. And then also beyond that, I want to remind everybody of what I call the Black Wealth Master Plan. I developed the Black Wealth Master Plan as part of our economic awareness training. You can get an EAT because I want everybody to eat. But if you want to eat, you got to be able to see the food. You can't eat if you can't see where the food is located. So I want everybody to eat. So we do EAT, economic awareness training, every morning. I used to call it financial consciousness training. Sometimes I'll call it that, but you know what it is, right? So anyway, the Black Wealth Master Plan is really simple. And what this was something that I wanted to come together with that would give us a very simple process that we can all follow that would make a massive difference in wealth. This will allow us to not just close the racial wealth gap for our family. I can't speak for everybody's family. There's too much ignorance, too much chaos, too many people that don't want to listen. That's fine. I'll let them do what they want to do. But for your family, there will be no racial wealth gap. For your family, there will be the only gap you're going to have is the fact that you're going to have jealous white people in your neighborhood who are going to say, how did those Negroes get all the money? That's what they're going to say. So just so you know, there's going to be jealousy. It always happens. If you become successful, lazy people will get mad at you. So anyway, here's what the Black Wealth Master Plan is. Very simple. And then Tara, I will answer your question about quantum computing. So give me 1 second here. I don't want to lose my train of thought. So the Black Wealth Master Plan says this. This is one generation out, really 2 generations before it really kicks in at a level that I know it'll kick in. But the Black Wealth Master Plan is that every Black child should know how to start a business by the age of 12. Because we don't want our kids running around depending on jobs from white people. That no disrespect to white people. I don't hate white people. I just don't want us economically dependent on those people. And the reason that you have to get a job in the first place is because nobody took the time to build you a capital base. If somebody had built you a capital base, if somebody had given you some resources, some stock, some real estate, some cash, something to go out in this world, you would not have to get up and go to work every day. So really, learning how to start a business is another plan B that will allow you an escape plan. Because here's the thing, money's everywhere. The economy is so abundant. There's so much money everywhere. But for some of us, it feels like there's money nowhere. It feels like money's hard to get and that money's very, very dry. Well, the reason is because it's where they position you. It's like if I'm in a body and all the water, it retains water. Let's say one half of the body is retaining all the water and the other half is dehydrated. And I live on the dehydrated side of the body. I'm a little amoeba or something. I live on the dehydrated side and I'm like, there's no water here. I'm just on the wrong side of the body. I need to go to the other side. If I go to the other side, there's plenty of water. There's too much. There's so much. There's so much there. I might drown if I'm not careful. So really, the same thing is true with money. If you look at the economy like a body, like a human body, what you'll find is that it's like a big body that retains water. See, rich people live like, let's say rich people live up in the shoulder, right? And what they do is they retain water in the shoulder, and water does not get to the rest of the body. So effectively, what happens is that you have this really distorted economic reality. Let me know if you're following this. I hope you're getting this. I like analogies. I hope this makes sense. So with this distorted economy, you've got people that have so much money, they have money to burn. They're like, oh, who can't make $50,000 in a day? There are people that think like that. And then you've got people who have a hard time getting $50 in a day because the economy is not a fair economy. When they talk about wealth distribution, it is like a body distributing water all throughout the body. Wealth distribution is not a thing in the United States. In fact, if you talk about wealth distribution, that what do? They start calling you a communist and or you're a Marxist, you're a socialist, and all that. And they use these terms to stigmatize the idea of sharing the wealth. I don't think there's anything wrong with wealth distribution. I also think I like to accumulate a capital base by working together that can match the capital base of the business owners and the shareholders because they always work together. And people that have capital bases, they tend to move America. Right now, at major universities, you have a lot of people who support Israel, who have massive capital bases because they spend their time teaching their children to build wealth. They think about this all the time because they see their money as their freedom, their security. They see it as a weapon. It's a shield. It's a sword. It's a knife. It's a gun. It's whatever they need it to be. So they spend all their time sitting around figuring out how to make money and how to keep it in the family. And now what's happened is that they've gone to war. They've gone to economic war to back up the actual war that's happened in the Middle East. They're going to war economically. They're going to the universities now and they're saying, oh, we've got the capital base. And we know that you need money because you're just a bunch of nerdy professors who sit around and write these research papers that nobody ever reads and you don't know how to make money. Well, we do. And if you don't do what we say, we're going to take your money away. We're not donating to this. Right. So again, while I honestly, I'm going to tell you, I don't agree. I tend to be on the side of saying, I don't understand why we gotta, blow up these hospitals in the Gaza Strip. I don't understand that, right? But at the same time, I see exactly what's happening, and I just, it's life. So capital bases are really important to protect yourself. You have to have a capital base. If you throw your child into the world without a capital base, you are basically throwing them into slavery. You are throwing them into exploitation. You are making them vulnerable. You're putting them in the middle of a gunfight without a weapon, without a shield, without training, without nothing. And then we wonder why they fail. We wonder why they're suffering. So anyway, let me keep going. And nobody else, I know nobody else talks to you like this. And they get mad at me because they think, yo, you're being mean. Well, guess what? As mean as I might be when I say this, the world is a whole lot meaner when you are 28 years old and you can't afford to pay the bills. So, I'm sorry if it hurts people's feelings, but I have to say this. So here is all right. So here's the other thing in the Black Wealth Master Plan. The second part of it comes down to stock ownership. I think every black child should own stock at the age of 5, but buying them one share of stock is not enough, or buying them stock one time is not enough. You have to buy it the same way you buy them food. No parent, no good parent in the history of this world has ever fed their child one time and said, "Okay, my job is done." Nobody does that. You don't feed your child once and then assume they're going to live the next 20 years. You don't do that. You feed them every day. You feed them regularly. Now with stock, you don't have to feed them every day, but I'd say once a week, once a month, something like that. And that's where that $5 a day plan comes into play. The URLs for that is well, actually just go to b1investing.com. I think it's there. So B1 Investing, be the number one investing.com, and it is free. You can have it for free for sure. So basically when you're feeding the child economically consistently, then what's happening is you're building that capital base for them that we talked about. So, and really you should start doing this when they're born, before they're born. In fact, if I was 25 years old and I knew I was going to have a child in the next 7 years, I would start investing right now for my child. Because remember that the wealth you build isn't just their wealth. It's the family's wealth. It's the family's wealth. So don't think you're just doing this for other people or you're just doing this for the future. You're doing this for the here and now. Even when you talk about saving and investing for retirement when you're young, I used to think that that was silly because when I was 20, I could not visualize being 65. I was like, there's no motivation for me to save and invest right now if I'm not going to benefit until I'm so old that I feel like I'm about to die. I mean, that's how you feel when you're 20. You're like, why would I do that? I got so many other pressing issues to address. Why would I start sacrificing for when I'm 65? Well, here's the reason why you do that. Well, remember, when you're investing when you're young, and you're accelerating your wealth growth and all that, and building that capital base, you have a capital base that you can still utilize even before you retire. You have financial security so that if worse came to worse, push came to shove, you've got some money in that 401k or that IRA that can make sure that you're not homeless in case you get mad at your boss and decide to quit your job. If you want to go and get some sort of productive asset, you've got an asset that gives you collateral. Collateral, you can borrow against that. And again, for those that are in the Prime program, I'll send you all the video where I borrow money from myself all the time. Why? Well, because I got a capital base, so I can go and pull money out. I can go and sell options. I can sell time. Options are beautiful because you can actually sell time. So I can sell an option that expires 2 years from now, get thousands of dollars, and have that money and use that money to go take my wife on a trip if I want to. Right. So you want to have someone investing for that child consistently just like you're feeding them. You got to do it consistently, every week, every month, whatever. Maybe half the amount you might put into your car note. If you love your child as much as you love your car, then this should be a no-brainer for you. It doesn't mean don't get the car. It just means make sure you feed the child as you're also feeding the car dealer. The car dealer is not more important than your children. I hope we agree on that. The third part of the Black Wealth Master Plan is that every child should be in a position to put a down payment on property by the time they're about 21 years old. And really that's flexible. It could be 25, but early to mid 20s, they should be in a position to put down payment on a property, because when you own property, you're able to participate in inflation in a good way. Inflation no longer becomes bad when you have assets, because what happens is that there's another type of inflation that's even stronger than regular inflation called asset inflation. Asset inflation means that when the price of everything goes up, guess what? The price of real estate goes up. So if you owned a house that was worth $200,000 before the pandemic, that house could easily be worth 400,000 after the pandemic, right? So while the price of groceries are going up, the price of gas is going up, the price of car insurance is going up, guess what? The value of your house went up. So you made money. You were surfing on the wave of inflation and making money from it. Workers can't really do that. People who don't own assets, unfortunately, are getting crushed by inflation. It is so unfair. It is patently terrible. I heard a professor from NYU who was talking about how the Gen Zers are really getting screwed because they don't own anything, and this inflation has made it super expensive for them to even get onto the ramp of ownership, right? So what you have to do as their parent or whatever, getting them ready for the world, is try to position them to be on the ramp of ownership without them having to climb up themselves. Because if they do it themselves, what they're going to do is what we did, which is they're going to struggle for about 15 years. They're going to be buried under student loan debt. They're going to be paying rent to a landlord. They're going to be paying money to the car dealer, whatever, and struggling with some crappy job that they hate. So they have to go see a therapist because they're depressed and anxious and sad because they have to go do something they hate every day, which is like living in hell. And then when they get about 35, they're going to have an awakening. Maybe they'll watch a Boyce Watkins video and say, this is it. I'm tired of it. I'm done. I'm tired of it. And then they'll be open to changing their thinking because they'll realize the world doesn't love them the way they were taught in elementary school. And then they're going to start this process of trying to relearn how the world works, but they're going to be like 40. So why waste 20 years in the darkness when you can put them in the light when they're 5, 6, 7 years old? Why do that? Why wait? Why react to how painful life can be when you're not prepared instead of proact and make sure you avoid the pain in the first place? Why we got to go through hell before we understand that heaven is accessible if you understand what's out here? You just have to have an awareness of the right way to go through this economy. Because let me tell you about this economy. Then I'm gonna start answering your questions in the Q&A section. Okay. Here's the thing with the economy. Student loan debt is at an all-time high. That's the biggest drainer of black wealth is student loans. It's crazy because we're trying to get intelligent and we're trying to make progress. We're thinking, oh, I got to go to the school and give them all my money. And well, that's actually the biggest drainer of black wealth that there is. So you're getting education, you're getting jobs, but you're not getting any wealth. So I don't know what that means. I don't know how that makes you feel. I don't know. To me, if I'm working hard, I would want to be achieving a goal, a meaningful goal. I would not want to just be working hard just to say that I did it. I want to work hard to know that I'm achieving the goals that matter to me. So if wealth is your goal, unfortunately, which sucks, is that student loans and college degrees and corporate jobs are not the pathway to wealth for most people. Number two, car debt, automobile debt is at an all-time high. Why? Well, because the prices of the cars go up, interest rates are higher. Everything's expensive, right? So people are going into debt and everybody wants to look fly because they want to, especially if you went to college and stuff, you want to look like you went to college, you want to look fancy. So you drive this nice car so your friends will ooh and ah and whatever, right? So it can fulfill your self-esteem. And the problem with that though is that is a depreciating asset that does nothing for your net worth. That's the sad part about owning a car. So when I go buy a car, my wife and I we buy nice cars. My wife drives a nice car. I drive a nice car, but we always get a car that's about 3 years old. The reason we pick a car that's about 3 years old is because it sucked out a lot of the fat in a lot of the financial fat in the price. So let me give an example. I wanted to get an Xfinity, right? Which again, so I'm not saying you shouldn't get a nice car. I have a nice car. It's an Xfinity. So we went to get an Xfinity and we looked at we looked at Escalades, and I went to look at an Escalade and a Lincoln Navigator because I like the big SUVs. And I said, I really can't justify spending 100,000 on a car because in my head I'm thinking about all the other things I could do with that money. So then after we went to the Navigator place, we then went to the Cadillac place. Cadillac was nice, but I was like, I ain't got nobody to impress anyway. I'm not an impressive guy. So why would, and if I am impressive, it's not because of the car that I drive. So I was like, I don't care. I don't want this car. And that was probably 90,000, 80,000, something like that. So then we went to the Xfinity place. Now the Xfinities were like $80,000. And I was like, wow, I want this nice new Xfinity. And I was like, I still don't want to spend $80,000 on a car. Affordability is not the issue at all. I have people on my team that I pay enough money where I could buy a Bugatti with the amount of money that I pay them. It was more like there are better things to use this money for. Like one rule of investing is what they call it the efficient use of capital. What one rule of investing pretty much says is that when you get capital, you should put it to its best use, right? You should not waste it on stupid stuff. So basically, we were going to get the Infinity. I was like, nah, I don't think I want to do it. So my wife and I were going to go to lunch, and then I said, well, wait a minute, let's go look at these other Infinities that are 3 years old. And 3 years to me is a sweet spot because you still get that new car feel, that new car smell. You know, you're driving, you feel like you're rolling in something nice. But what I found was that it took $30,000 off the price of the car. So I was able to get a car that made me just as happy, but for a price that was $30,000 less. And I drive this car and I get compliments on it. People that in my family, they see it, they're like, "Ooh, this is nice," right? Whatever, right? All that stuff. I get all that, that what they call utility, which is happiness. That's the economic term for happiness, which is utility. I get the same utility for a much lower cost. So really, money and investing is very, very emotional. Right. A lot of times I like, why do you want that nice car? Well, because you like the feeling of driving the nice car. And I'm no different. I wanted that feeling of drive. I did not want to drive a hoopty. I did not want to drive a raggedy car. Right. And my wife is bougie as hell. She likes to be comfortable. So there's nothing wrong with that. But the question is, how do I get comfortable without destroying my wealth in the process? And that was where that 3 year sweet spot came into play, because if I'd gotten a brand new Infinity instead of one that was 3 years old, I don't think I would have felt that much better, but it would have cost me $30,000 more. So instead, with that extra money, I was able to invest that. We paid the car off pretty quickly, and we were able to then get back to the real use of capital, which is investing, right? So I encourage you to like can sort of think about that process. And it's okay to connect your feelings to your investing, because I really think that there is a lot you can learn there in terms of knowing how you can make moves that are going to help you maximize your happiness in the short term and in the long term. And it's a complex process, but I want you to think about that. All right, so let me answer some questions in the Q&A section. One thing I want to mention is that we do money in the morning, our economic awareness, our financial consciousness training. If you haven't gotten an invitation, all you have to do is text the word morning to 87948. So text morning to 87948. Or if you live out of the country, you can go to drboyceelevate.com. That's drboyceelevate.com, and you can be invited. Also, my book, The 10 Commandments of Black Economic Power, as well as my wife's books on financial anxiety, things like that, can be found at drboycebooks.com. We have financial flashcards and workbooks for kids as well. In fact, my book, The 10 Commandments of Black Economic Power, we designed flashcards to go with the book. So if you want to explain these concepts to your kids, which are really important Black wealth concepts, I wrote the book specifically focused on Black wealth. And a lot of the concepts and the layouts and the theories in that book are not things you're going to see in the textbook anywhere, because we specialize in Black wealth. I don't care about what other people are doing unless it matters to the extent that we can learn enough from it to solve the Black wealth problem. So if you want your kids introduced to these concepts, maybe this summer is a good time for you to kind of get them on the good foot and give them something that will change their life. I guarantee if you pay your child $20 to go through and learn the concepts on the flashcards, it'll be the best investment you ever made. It will change their economic trajectory for life. And there's nothing that they would learn at Harvard or an HBCU that would match the way we teach wealth in the Black Business School, because we're the best at Black wealth on the planet. So anyway, let me answer some of your questions. So Albert says, why do you think SoFi is having trouble moving up after great earnings? I don't know. I haven't kept up with SoFi. Let me see. Sometimes, let me just speak in generalities though. A lot of times what happens is when a company releases their earnings, they don't just give their earnings, they give guidance. So the earnings, there's what they call expectations. So when a company releases their earnings, the first thing the market does is they say, well, how does their actual earnings compare to what we thought they were going to do? And if they don't meet expectations, that's going to usually be a hit on their stock price. But then what happens is they give something called guidance. Guidance is where they tell you what's on the horizon, right? Because remember, these are insiders. They know what's going on inside the company. So they're looking out and they have a better view than you do. You're an investor. You don't know what they're big projects are. You don't know what their opportunities are. So you're watching their reaction. So they're looking out on the horizon. They say, okay, down on the horizon, we see great opportunities and lots of money. Well, the price will go up because of what they call great guidance, where they're setting higher expectations because they're hearing the CEO say, hey, we got these great things coming. Now, sometimes though, they can give weak guidance. Like Microsoft, even companies that big can say, hey, we're noticing a softening of consumer demand, or Walmart might say, we've noticed that the consumers have been pushing back against higher prices or whatever. And that can actually pull the stock price down a little bit, and they can actually negate the effect of a positive earnings announcement because the guidance is so weak, right? So it's almost like the company saying, look, we had a great first quarter, but we think the second, third, and fourth quarters are going to be bad. I personally think that could be an opportunity. If you believe that the company is a good company and they're just having a bad year and their stock price moves because they're expected to have a bad year, if you think that they're going to eventually have good years again, then maybe that's an opportunity to buy. It all kind of depends. Let's see. What do you think about AI energy? Veronica, I don't have that stock right in front of me now, but I can look it up real quick and kind of give you my quick eyeball on what I think about the stock really quick. Okay, and so I'll do this maybe we can do this maybe for about five stocks, and then let me see. Okay, AI energy. Okay, I don't see this company in Robinhood anyway. So I can't give an assessment. If it's not in Robinhood, it makes me wonder if it's like a pink sheet or something like that, or like one of those stocks that costs like $1 or something like that. I know that they're tempting, but I don't mess with stocks like that typically. A lot of the stocks that cost just a few cents. The industry. I'm sorry. Oh yeah, AI and energy. Girl, please. AI and energy? Yes. Yes, Veronica. My view is I'm invested heavily in energy. Heavily, heavily, heavily. Particularly in things like let me see, URA. URA is a uranium ETF. And I bought a bunch of shares, and I buy that consistently because I believe that uranium is going to be in higher demand because they're going to need a lot of uh of these power plants to run all the AI factories or facilities or whatever they call it. Um, and basically nuclear energy is the most efficient type of energy out there. Microsoft's even talking about building a nuclear power plant, and I have a few more. Actually, I'm going to put up a list of stocks for those of you that are in the Black Stock Market program. There's a section what Dr. Boyce is buying, and I'm going to find five stocks, and I'm heavily focused today on energy, so I'll put those in your materials. If you go to drboycestocks.com, drboycestocks.com, you can sign up if you want to and give it a try. Shauna, if you have five children, are you buying five stocks for the $5 a day plan for $35 a week, or one stock for 175? That's a great question, Shauna. Um, the general rule is I would not overthink it, right? I would not think of it like you're cooking food for a bunch of people. Like you got five kids, you're cooking food for all five kids. It's not like you cook one meal for one child and then one meal for the other child and one meal for the other child. You just make a big pot of food and then you just split it up and everybody gets some on their plate. And then you eat too. So I would think of investing like cooking, where you just invest a certain amount every week for everyone and let it grow naturally, and then you split it up based on how you want to distribute the funds. And also that's your money too. And I think it should be in your name until you decide that you want to let your child have some portion of it. You have to be really careful about giving money to kids because kids are stupid. Kids just do dumb things. I'm sorry, I was dumb when I was a kid too, and so I'm not a fan of giving your hard work away to a 19-year-old who might throw it all away, who doesn't have a respect for how hard you had to work to get that money. You'd be looking like that poor lady in The Raisin in the Sun when when the daddy had worked his whole life and they got the insurance check, and then he gave it to Willie so he could invest in the liquor store, and then the money was gone. Well, that was a problem. That was a big investing mistake because that showed a lack of diversification, number one. That money should not be in Willie's liquor store, and the mama understood that. The mama and the son both made mistakes. The son made a mistake in the Raisin. Does anybody know? Y'all know Raisin the Son, right? Y'all know Willie in the liquor store, and did everybody go through that? In case you don't know, the daddy had worked his whole life. The daddy was dead in the whole play. So the daddy had worked his whole life. He basically had this insurance policy. and it was a poor family. And when the daddy died, they were going to get a big check for $10,000. So they were trying to figure out what to do with this $10,000 check. So raising the son was a financial play. It was all about money, pretty much, and how money affects people's emotions, how it affects family dynamics, how it affects relationships. It was a financial. It could be a financial lesson. So basically, with this money, the son's all doing, again, because money's a drug. He's doing what a drug addict does. He's fiending. He's nagging his mama. Hey, mama, what did the check get here yet? Did the check get here yet, mama? Right? It's causing stress, right? Like Diddy used to say, more money, more problems. So there's family stress around the money and everything else. And then finally, the mother gets the check. She gives it to the son. He goes and he puts it into his friend Willie's liquor store or something like that. And then his friend runs off with the money, and the money's gone. So the mistake that I saw in that situation is, number one, the son did not diversify. You don't put all your money in one little business. You don't start some business with your cousin and put your whole life savings in it. That's very risky. That's extremely risky. You spread your money out. The mutual funds give excellent diversification. Again, at b1investing.com, one of the first things I talk about in the $5 a day plan is diversification, putting your money into things like mutual funds so you get natural spread on your money. Your money's kind of out there. So the odds of you going broke are non-existent. It's pretty much non-existent, because that would mean that Microsoft goes bankrupt at the same time as Tesla, at the same time as Nvidia, at the same time as Apple, at the same time as Walmart, at the same time as Amazon, right? What's the odds of that happening? It's not going to happen, right? So diversification is critical. The mistake the mother made, in my view, was she was probably too conservative, in my opinion. But but she was smarter than the son, obviously, because she wouldn't have lost all the money. And what she wanted to do was put all the money into the house. She wanted to buy a house. And that's a little bit of a problem because, again, there's not diversification. You're putting all your money into this real estate deal, basically, and you're not thinking about all the other places you could put that money that would allow that money to grow. But I think her option was clearly better than his. But the other mistake that she made was one that a lot of wealthy families make, which is that she gave the money to her son, period. And that was not a good move for the same reason that a lot of wealthy families lose their money that way. Did you know that 70% of all wealthy families lose all their wealth within one generation? And 90% of all wealthy families lose everything within two generations, because they give the money to the wrong people, and then those people take the money and they just do stupid stuff with it because they don't know what it takes. They don't have the same character, the same values that were required to build that wealth and accumulate that wealth in the first place. So her just giving the money to her son was a mistake. Not diversifying enough was a mistake. Buying real estate was a good move. That would have been a generational wealth building move, because that little house they buy in the south side of Chicago for $10,000, in 40 years, that house is worth 500,000, right? Or whatever. And I've seen this play out in real life. My wife has a great grandfather who bought a building in the south side of Chicago in like 1930 for like maybe $10,000. That building now is worth well over 1.5 million. And not only is that multi-million dollar asset still in the family, but his great granddaughter lives in the house right now and has never, ever, ever, not once paid rent in her whole entire life. And she lives off the income that comes from the tenants in the building. Do you understand what I'm saying? So these generational wealth moves are critical and important. And here's the thing about reparations that I think you should consider is that our grandparents and great grandparents, many of them did do these things. They did think this way. They did buy this land for you. They bought these assets for you. They did build these businesses for you. They weren't all a bunch of suckers. They weren't all ignorant. We know these things, right? And that stuff was stolen. And that's one of the things I think that we have a right to be politically upset about. That's something I think we should not just sort of let them sweep off the table. There's no rule book saying that I'm supposed to be poor and the white man's supposed to be rich. There's no rule saying that my family's supposed to struggle and his family's doing good. There's no rule to say that the stuff that his granddaddy stole from my granddaddy is supposed to stay in his family. No, that stuff belongs to me. And I think that that's something worth fighting for. So anyway, let me keep going. All right. So do you have a link for a one-on-one consultation for options portfolios? I think Amani's in here. Is Amani, are you in the chat, Amani? Where can you help our friend out? So Amani, if you could share your information or a link. If Amani, I don't see the her response just yet, so I assume she's around. Um, do this. Email support at theblackbusinessschool.com. That's support at theblackbusinessschool.com. and they can take care of you. And I do a limited number of one-on-ones, but we can't do that. Also, I do have a mastermind in investing that we started. It's more so for qualified investors. If you have a capital base of somewhere around, say, 40 to 50,000, it's better that way because we're actually looking at some higher level investing. For example, private deals, things like that, that people are doing that, we're connected to. But for the most part, if that's of interest to you, you can also ask about that when you email support@theblackbusinessschool.com. But there's I have to have a requirement. So there's a test you have to take and you have to sort of apply for that. But that's something that you don't have to do that. There's other stuff you can do as well. All right. So Derek says, are you going to make the 10 Commandments of Black Economic Power into a t-shirt or a long sleeve shirt? That's a great idea, Derek. I mean, I hadn't thought about it, but sure, why not? Um, I don't know what to put on the shirt though, right? We have Black Business School shirts with our Panther on it, but I don't know what I'd put the 10 Commandments of Black Economic Power on the shirt. That'd be kind of a lot, right, for a shirt. All right, so let's see here. Patricia, buying fractions to start, how to buy and how to take profits off the top to buy more and purchase stock, how to gauge. Okay, well, a lot of that is in your curriculum. If you log in at theblackstockmarketprogram.com, all that's in there, or you can also go to the drboycemethod.com. The drboycemethod.com, I lay out the whole Black Stock Market weekend where literally there's a ton of stuff in there on an 11-step process that we literally call the Dr. Boyce Method. It's really trademarked, that basically explains how to go about picking stocks for your portfolio. So feel free to take a look at that. It doesn't cost that much. It's pretty inexpensive, and it's yours. You can share it with your family, whatever the case may be. And I know you're gonna like it because every single student that does our events likes our events. And so anyway, and if you ever have an issue, we always hunt you down to find out what we can do to make it better. So we care deeply about making sure that you're extremely happy and that we solve your problems in ways that you want them solved. All right, so let's see. Johnny says, what are your thoughts on TSM? Okay, let me look at TSM. And then after that, I'm going to bounce on out of here. I think I have another meeting I got to run to, but I will come back. And don't forget that tomorrow morning we are doing economic awareness training, EAT. So I want everybody to eat. So feel free to join us. Just text the word morning, MORNING, to 87948, or you can go to drboyceelevate.com. So text morning to 87948. All right, so let me tell you, TSM, Taiwan Semiconductor, the short answer is heck yeah. Taiwan Semiconductor is a great company. Now it's moved up a lot. It's gone up 20% this month. Year to date, it's gone up 50%. The last year, it's gone up 66%. So there is a risk that it could be, priced on the high side. But despite that, I like Taiwan Semiconductor. It's a great company, great business, great long-term investment, in my opinion. And if the price does drop, here's the thing. I think that the market is due for a pullback. I think that sometime toward the end, whenever you start seeing all this fluff and greed and people getting excited and FOMO, what's going to happen, I believe, is that it's going to keep pushing stuff up. I think Bitcoin and the stock market, it just hit 40,000. I think it's going to keep going for a little bit. But what's going to happen, in my opinion, is there's going to be some catalyst, some black swan event. I believe it's going to happen this year. And that black swan event is going to then change the headlines to, this is the worst day for the Dow in 3 years, or Bitcoin drops 20%, stuff like that. I think that's going to happen. So if you want to be protected against that, that's where things like put options, stop loss orders, things like that come into play, or taking a little bit off the top. That's really a personal decision. You can prepare also by having cash available. Having cash available means you've got guns in the holster that you can pull out in case there's an opportunity. Remember, every crash is an opportunity to buy really great companies for a really good price. So you shouldn't get sad when there's a crash. You get happy. That's a great time to get in. And then also, the thing about it is I don't know when it's going to occur, and I don't know how long it's going to last. I don't know how deep it's going to be. But the market is so strong that I'm concerned because we know what goes up comes down, and I think things might have gone a little bit further than need to go. Also, this week, one potential catalyst in the AI space could be Nvidia, if because we still don't know how profitable AI is going to be. If AI does not turn out to be as profitable as we think, that too could be a catalyst, because if Nvidia falls, a lot of companies in that industry are going to fall. So I'm curious to see what happens on Wednesday. And I would encourage you, if you are an investor in, say, Nvidia, and you want to protect your gains, you might want to, think about some ways to deal with that. I did do a training on that called Stormproof Investing. If you want to take a look at that, just go to stormproofinvesting.com. We get these URLs to make it easy for you to find stuff. So stormproofinvesting.com. I did a whole day-long training on it, and I think you'll find it quite beneficial. All right, so let's see. Regina says, "How should I invest 75K cash sitting in an IRA?" I would say very carefully. This is not investing advice, but maybe starting with mutual funds, things like that might be a good way to go. But it also depends on what you're seeking to do, right? So if you're seeking to generate income, maybe that's where selling options and things like that can help you. But I don't use a big chunk of my portfolio to sell stock options. I just use enough, just a small part of it, so I can generate income to do what I want to do. But the rest is for long-term growth, so that I can, buy real estate or whatever it is I choose to do with that money. So I would talk to your investment advisor about it. If you did want to sit with me and talk about it, I do small group sessions with like 3 or 4 people where I can really look at your situation specifically. If you're interested in participating the next time we have one, just email support@theblackbusinessschool.com, support@theblackbusinessschool.com. And I thought Amani was in the chat. She was here earlier, but I guess she had to go. She's on our support team. So she is also a person that can help you directly. All right. So last question. What do I think about XLU? Okay, so Jackie, you get the honors. This is the last question for today. All right, so XLU. Let's look up XLU. Let's learn about XLU. What do they do? What company is this? Okay, XLU. Utility Select Sector Spider Fund. Okay, so this tracks market cap weighted index of U.S. utility stocks. I like it. I like it. I like it because the research I've done, and I don't even know where I heard this. I just take in financial information all day long. I'm just constantly listening to podcasts, reading stuff. I'm members of stuff. I'm a member of a lot of things. Um, yeah, they own a lot of energy companies, right? Remember I was telling you earlier that energy is just a productive asset. In fact, I like XLU so much that it actually reminds me. I think I meant to buy some of that actually. So after we get done, I'm literally going to go buy me some XLU with whatever little cash is in my portfolio. And this is how I want you to consider investing. Just do it. Just, you're in line at McDonald's and you want to impress your kids, buy some shares of McDonald's stock and let them watch you do it. And then explain to them what that means. Like our family now owns a piece of McDonald's. That's really cool. That's really cool. I explained one of my daughter's friends works for us, and she helps me ship out books and everything. And so she was asking me about investing. So I just showed her. I was like, "Oh yeah, buying stock is easy. Let me show you how quick you can do it." And we did it. And I think it was Chipotle. I said, "Pick a company," and she picked Chipotle. And I said, "Now you see, this is the price. This is how you do it." Da 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 da. And within 5 minutes, we did it. And she had this emotional reaction. She said, "Oh my God, that is so cool." Right. And now me, I'm not cool. So being a cool dad is kind of cool, right? So anyway, though, it was awesome because in my head I was thinking, this is cool to me because I know that what I just told this young lady at the age of 17 is going to have a massive impact on her life. It's also something that she's learning at 17 that a lot of kids don't understand until they're like 35 or 40. A lot of you have seen this. A lot of you, and I'm not saying it's a bad. I mean, I'm glad you learned it whenever you learned it, but think about this. There are lots of you in here that might have learned this for the first time when you were 58 years old. Right. So for her to learn this at 17, and then the next step is I want to get her to apply it. Right. So we actually had a conversation about options a little bit later. And I said, let me just show you my portfolio. Let me show you how easy it is for me to get money, right? I can earn it, pull as much money out as a doctor makes in a year by doing this, this, and this. And I showed her, I said, look, right now, if I hit this button, I'm going to have $80,000 or $100,000 in my account, right? And now, of course, I'm not a poor man, right? So it's a little bit more money. I've been investing a long time, but it's really nice to be able to show them real ways to make real money that goes beyond whatever crap we were taught when we were little kids. That whole slave thing, that whole like go get a job and hope somebody hires you and make sure you're well behaved and you'll barely get by. That's only one type of existence. There's a lot of different things you can do to put yourself where you want to get to. And I want you to be exposed to that, but I really want your kids and grandkids to see it. And the earlier you can help them see it, the greater chance they'll have to be it. If they can see it, then they will be it. Because I guarantee you this, and this is the last thing I'm gonna say to you guys, and I hope that this makes sense for you, and I hope that this helps you. When you expose a person to freedom and slavery, it becomes a very easy choice. A person does not have to be smart or educated to know that it's better to be free than it is to be stuck. An animal understands that. An animal that's in a cage, if you give him one little taste of freedom, he's never coming back. So show them freedom. Show them all the different ways to make money instead of whatever your parents might have showed you or your grandparents showed you. I know that there's more out there than that. So, but it's up to us to do that. We are the teachers, we are the leaders. Black leadership does start with you. In fact, that's the theme of this year's All Black National Convention is that Black leadership starts with you. It's not Al Sharpton and Jesse Jackson and whoever else they put in front of us. It's you. It's you. We are the Black leaders in our community. So let's go lead. Let's give these babies a chance to be successful. Let's make them competitive. Let's make them into winners, and that's what our legacy is going to be. All right, so I gotta go, guys. Thank you so much for hanging out. Again, drboycebooks.com if you want to take a look at the flashcards and workbooks for kids, if you want to take a look at that. Also, if you want to join us for the economic awareness, financial consciousness training tomorrow morning at 10 a.m., we do this every day. Just text the word morning to 87948, and I will put you on the list. Text morning to 87948. And last but not least, if you want to take a look at, so the drboycemethod.com is also a space where you can take a look at the stock selection process. So I broke down in a formal training that's yours. You can have it for life. Exactly the process for picking out stocks and questions you can ask yourself to decide which stock is for you. Picking stock is not an exact science. It's not something that is a one size fits all. It's like me telling you how to put on your clothes or what clothes to wear. I can't tell you what to wear. What I can tell you is what different fabrics feel like. I can tell you which clothes might work in a business setting versus when you're going to the beach. I can tell you, I can show you a red suit and a blue suit. And then at that point, once you see everything that's out there, you can say, I think I want to wear a blue suit that's going to help me go to the office, right? Because this is what I want. And then tomorrow I'm going to wear a red swimming suit because I want to go to the beach. Do you see what I mean? So that's kind of how investing works. There's no one way to do anything. It's a matter of seeing all the different ways so you can pick the method that works best for you. And they basically call that your preference, right? You have your risk tolerance, your risk preference. You also have your own preference in terms of what you're trying to accomplish with your portfolio. So learn all these things. That'll really benefit you. Okay, I gotta go. Have a good day, everybody. And if you want to come to class, like bring your kids. Like, why not? I think I teach this pretty good, right? Bring your kids or people, those of you that are bringing your kids and grandkids, don't be shy. Be aggressive, right? If we want our community to succeed, we want our families to win, we got to take ownership of this damn thing. So I'm aggressive with you because I want you to be aggressive with the people around you. And because I don't think that we're ever supposed to be these little weak little oppressed people, these broken people, these messed up families. No, we're winners. That's what we're winners up in here. So let's go win. All right, so I'm out of here, guys. Have a great day. God bless you, and I'll see you guys soon. Take care. Bye bye.